The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at the DAX today. As you can see here, we had a little bit of a down move here, but the one that's really interesting, folks, is if you take a look at what's happening to the FTSE. The FTSE this morning really got a big hit. We went from above 7,700 down to 75, 74 very, very quickly. And so it's going to be really interesting to see how if it can hold these levels that we're looking at right about now. The stock market, of course, is still holding up relatively well, given the fact that we've have all these tariffs and things going. Folks, if these grains are not bottoming here, they don't have a bottom. That's basically the bottom line. If you'll take a look at the newsletter this week for futures, you'll see that there's all kinds of three drive to a bottom pattern in all these grains, with the exception of the wheat. And since we're talking about wheat, I wanted to, Dennis Gartman was kind enough to send on a chart for our folks here to take a look at. This is Kansas City wheat, and basically what it's doing is it's showing the cyclical and seasonal nature for Kansas City wheat to move higher. This comes from Charlie Seneger over at EDF Man, but you'll notice from July all the way through August and early September, there's a very highly positive bias in wheat, and the charts are telling us that because the wheat is the stronger of any of the other grains. Of course, corn and soybeans are weaker, but boy, I'll tell you, those patterns are really indicative of a bottom in corn and in soybeans. So we might want to keep an eye on that as we look at that. Now, over the weekend, I had two questions. One was regarding these interviews that Mark Douglas had done with these traders over the years when he was doing the book Trading in the Zone here in Tucson. And of course, he finished it up in Scottsdale, but he did the first 2 years work here in Tucson, and he had interviewed a whole lot of people, and there was a really interesting segment there that he had put together that was part of the book of what the one thing that the traders that are really good have in common, and that is basically they have a foundation of absolute trust in what they're doing. They have a skill that they've developed over a time that allows them to perceive an opportunity and use a precise methodology to develop that opportunity. That's basically what it's all about. It's a foundation of trust. And I got a phone call from one of my old clients from Drexel Burnham, Joe Delaney, and he was reminding me of what happened in 1977. I'd been with Drexel about a year, and Star Wars was out, and you couldn't get a ticket for the movies in Star Wars in Los Angeles. It was just packed, every movie, and there was just no way of getting it. So Mike Milken, being a friend of George Lucas, was able to get the film, and he went to his good buddy, Jerry Buss, who was a real estate developer that owned Century City, and he had the Century City Theater. And so Drexel rented the whole thing, and Milken footed the bill. He had all the employees, children, and customers for Drexel Burnham for a Sunday to go Sunday morning from 8 until 12. They played the show twice for Star Wars, and it was free, and they opened up the concession. Everything was free. It was really fabulous. I took 8 little kids there, 6 little girls, 2 little boys. I had some pretty famous little kids. There were a couple of Los Angeles Dodgers kids, and my daughters were best friends with Chrissy Seraphin and her sister, and that was Danny Seraphin of the group Chicago, and they were with us there, and we had a really wonderful time. But the funniest thing that happened was the little girls Laren and Chrissy had to go to the restroom, so I had to take him to the restroom. And this is a huge place, folks. And they went in one door and came out the other, and I lost him. Oh my God, I was so panicked. For about 20 minutes, I couldn't find him. And if you'll remember, the Star Wars was really crazy, and it was always loud and everything, and I couldn't find her. And I wasn't worried too much because it was all private. But when a real quiet part of the movie came, I heard this yell out, "Daddy, I'm lost!" And then we finally found her. So she was there, but then we remembered it. But anyway, I wanted to talk a little bit about that, because when we're talking about the foundation of trust, part of that thing in Star Wars I liked is the part when Han Solo is trapped, and the only way that he can get out is to go through the asteroid belt. And C-3PO says to him, "You have a chance of 3,731 chances of dying." And Solo says to C-3PO, "Don't talk to me about odds. I have to do this, and I know I can do it." And that's what you have to do when you're trading, is you have to have that foundation of trust. As even though things are looking like maybe they're not going to, don't tell me the odds. That's exactly right. And but anyway, that's what it's really all about. You just got to be able to have that foundation of trust. And that was the one thing that Mark always talked about when he interviewed these traders, to try to get to that area of where they were. Because some of these guys never use stops, folks. These big traders that Mark interviewed, they had such a belief in what they were doing. They would take some big hits at times, but they really had a really big foundation and trust. And that is that. No, I don't have an audio book. Mark Douglas has got that thing on an audio book. If you're interested in it, you can contact Paula Douglas, because she has trading in the zone, in Mark's words, on an audio book, which is really good. But one of the other things that was really important to these guys that have this foundation of trust is they execute their trades flawlessly. They don't think the second. Doesn't make any difference what's happening. If they believe something, they would execute the trade immediately, right in the middle of anything. I remember sitting with Byron Tucker several times, and he was telling me about Leo Melamed, because he worked with Leo and helped develop the CME stuff for currencies and the T-bills and the S&P and stuff during the early 80s. And whenever Leo would put a trade on, and he traded in 50s and 100s in front of a report, Byron would mention me. He said, we've got a report here, and Leo would say to him, "It doesn't make a difference." He says, "The market's going higher." And that's just the way his foundation of trust was in himself. And he's almost 90 now, and Leo's still trading actively. So it's this foundation of trust, and they don't get this overnight, folks. There's no way you can do this overnight. You have to do this in baby steps, little by little. That's what you really have to do. And you got to be able to be, boy, you're really right, David. David White is putting some things here in the Tiger Den this morning about, the carefree confidence and stuff, about being a trader and belief in yourself. And that's really where it's coming from. You have to spend time on that emotional part, because if you don't, the rest of it doesn't come nearly as easy as you've ever seen. Yeah, speaking of the World Cup, David, that's the first soccer game I ever saw, was England against Belgium. That was the very first one that I've ever seen. So I didn't watch the one with France, but it was very, very exciting, as we did see a little bit of it. Boy, they sure get excited in the games, though. My goodness, it's like watching a couple of Super Bowls. I don't know why they don't have them every year instead of every few years. I don't understand that. They ought to change that. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm going to share a chart with you from my good friend Jim Bartolioni. And as you can see, this is a long-term QQQ NASDAQ going back to the old 2000. You can see that we're up near this 1.618 expansion that we've already seen in the composite, of course. But this is just a very interesting chart. Several people have asked me if this is similar to what we had in 2000 with the dot-com bubble. I don't believe so, and the reason for that is in the dot-com bubble, that was a once-in-a-generation thing because you had stocks that were just absolutely, valueless. Global Crossing was one, WorldCom was another. Those are just two that I can think of. And, these stocks were just basically figments of people's imaginations. And, but this is, these stocks are different. I mean, you got things like Google that everybody uses, Amazon. I mean, look at the stock of, look at the chart, the long-term stock of Amazon. This is how you become the richest man in the world, folks. Look what Jeff Bezos has done. He's taken a little bookstore and going back and look what it's trading $1,800 a share. I mean, that's not even, I don't even think that's even counting the splits if they've had any. But that's basically a stock that you're just not going to see very often. But that's been duplicated by Google. Google had to say, look at the long-term chart for Google, for heaven's sakes. It's done pretty much the same thing. But Google, if you'll notice here, just get this up here and take a look at it. There's a big split here in Google. That's why you're going to see the separation of things. But if you'll notice here in 2009, we had a huge ABCD pattern down there when it was trading at 255, and now it's 6 times, greater than that as we move out 7 years later. So these are huge moves that we've seen in some of these things, and so it's important. Netflix is another one. Look at Netflix. This is an interesting one because this stock has had some huge moves. You'll notice that it had lost 90% of its value between 2011 and 2012. 90% of its value it lost. And look where it is now. It's trading over $400 a share. It had two 38% retracements there, one in 2015 and another one right near the election 2016. And from that level, it's gone up 6 or 7 times. Now, these stocks, you don't see these very often, but that's indicative of things that can happen in the market. You just don't know where some of these things, are going to go. Look at Apple. Look how well Apple has done. And Apple had a lot of trouble, many years ago when, they got rid of, gosh, I can't even think of the guy's name. Oh dear, it's a major senior moment when you can't remember the guy that started Apple. Let's take a quick look here because we've got a real interesting market that we've been following for quite some time, and that's the futures markets for the Treasury notes and Treasury bonds. We felt that this was probably going to be one of the most interesting ones to go down for this week, and I wanted to bring this up to let you folks see it because we're already dropped a full point from where we were talking about this. That we focused on this in the newsletter over the weekend, and so that's one of the things that we want to keep in mind. We're already down to, we're almost ready to to break the 145 level. So that's pretty much Steve Jobs. That's his name. Boy, oh boy. That must be a major senior moment, but we'll see. Anyway, how can you not remember Steve Jobs' name? Other things I remember, so we'll see. Okay, I did some of those other stocks, those other FANG stocks, and they're pretty much, they all look the same. They've been straight up. And remember, you're only talking about a few stocks out of that NASDAQ 100. There's about probably 15 stocks in that NASDAQ 100 that make it go. Same thing in the composite. And that's basically the way the thing is constructed. And when these things get expensive, like $1,800, $1,700 a share, those are heavily capitalized stocks, and they wipe out all the little stocks that are not doing very much. So that's why we're looking at sort of a two-tier market, and I focused on that again. I wanted to bring two things to your attention. One is the fact, hold it, let's just get this up here so we can see it. 1 second. Here's the actual two-tier market, what it looks like. It still doesn't look any different. In fact, we actually closed lower than we did on Monday in the New York Stock Exchange Index when the rest of the markets had actually gone higher. So that's another thing. And the IWM has been lagging because we actually had a down week in the IWM this past week, and it didn't make new highs, which it had been the leader all along. All these have made major ABCD patterns, but sometimes these patterns fail, so you have to pay pretty close attention to it. But getting back to the bonds and the notes, they were certainly ready to go to the downside. They had all the earmarks of these negative Gartley patterns that we look at, and it's only dropped a handle so far, but that's $1,000 so far this morning. But that's one that you want to keep a close eye on. Another one, of course, is the gold, silver, and platinum. They've got a real chance in here, folks, because we took out the lows of December last week on Thursday. We got down below the 1239 level, which was below the low we made in December of last year, and we haven't broken that yet. But as long as we can stay above that, we've got a pretty good chance for the market to have a pretty good rally here. Whether this is going to be the big rally that we're looking for or not, we'll have to wait and see, because these markets are acting a little differently, and people in the financial press are, they're saying, how can the stock market, be at this level given the fact that we have $200 billion worth of trade wars going on? Somebody knows something that these people are talking or don't know, because money knows where it's supposed to be going. Money is a thing that talks. They say, BS walks and, whatever the rest of it is. But you got to pay attention to the money flow, folks. And we've been, that's one thing that we've been saying here for a while. I mean, even though it's negative, the market keeps going higher. We saw this in 2000. We saw it in 2007, 2008. If you remember, in October of 2008, Bernanke came out and said, all the signals were green. Everything looks great. And a month later, the market had made a top, and the market dropped 75% of its value over the next 2 years. So you got to be aware of what the markets are doing and not what people are talking about, including the person that is speaking to you now. You have to do the work yourself. As Jim Twentyman says, defy human nature. Do the work yourself. That's the key, because you're the one that has to have that foundation of trust. You're the one that puts the order in. You're the one that takes the advantage of the trade. You have to take the heat on the trade. So it's all up to you. You're the one that has to do it. We give you some ideas and things to look at, but you're the one that actually have to do the work yourself in order to see how it's going to work. Another one that's very interesting is the fact that if you'll notice what's happening in London with Theresa May. She's fighting for her for her political life, and yet the British pound is not collapsing. It's had a pretty good rally. It's gained back most of what it lost last week, which is a relatively positive sign. Just take a look at it right here this morning. We've had just in the last couple of days here. This is an hourly chart, but from where we were last Friday, we've rallied almost up 200 pips. We're almost up to the 78% level at that 133. This is in the midst of a total collapse of her party, possibly, and the key word there is possibly. 877-927-6648. Stay tuned for some more Mark Douglas.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I was going to talk a little bit more about some of the things that Mark had done. He worked with a lot of, really successful professional traders, but his original work that he did when he was writing the book, The Disciplined Trader, was basically from about 20,000 different accounts from Merrill Lynch across the Midwest. They gave him access to that so he could understand why these people were losing money in commodities. And the three things that he came up with was the main reason why these folks lost. And the odds on it, by the way, are about 85% of the people that start out in the commodities. Was all about commodities. It wasn't about stocks. Was that the 85% of the people that start out lose. And the reason why is there are three reasons. One is a lack of knowledge about the markets. Second is poor or no money management at all. And third is lack of any trading approach. But what happens of those 85% that lose, those that stick with it, in other words, they'll start out with 5,000 and bring in another 5,000. If they stick with it over a 3 or 4 year period, those are the people that make it. So it's about 10 or 15% of the people that are making the money that the other 85% are losing. Those statistics, I believe, are still pretty much the same. So that's just what that Mark came up with. But he had all of these statistics of different things, and then he interviewed many of these. I mean, he had hundreds of interviews from these clients that Merrill Lynch were kind enough to share with him, what they were doing. And you're right, it is an expensive tuition. The ease of entry into our business is very, very simple. You just have to write a check and open an account, but it's what you do after that that determines, what you're going to do. So these were some of the things that were important, but almost all of the people that he interviewed, the reason why they had a hard time is because it was the fear mechanism, because the fear is what really got them, into trouble. And that was the whole thing, because fear builds in that mechanism that, doesn't allow you to act on the next trade, because you begin to doubt yourself. And when you have self-doubt, you're done. It doesn't make any difference whether you're playing golf or you're playing soccer or whatever else. But if you've got self-doubt, that's it. You could see it in that game with France. The poor little goalie, he would always guess wrong. And that was the difference. 4 goals guessing wrong and it's over. And that's pretty much right. So that's what you have to. But those are the 4 primary fears. David has just put those in again: the fear of being wrong, the fear of losing money, the fear of missing out, and of course the fear of leaving money on the table. And those are the ones that you have to go through. Remember what Anthony Robbins said, the acronym for fear, FEAR, that's false evidence appearing real, because 95% of all of our fears never come to fruition. So just remember that when you're dealing with that, you conquer fear, you conquer the failure. So that's some of the things that you want to look at. So we'll see what's going on as we'll look at it. There's someone said, did you ever wonder why leaving money on the table was more painful than taking a loss? As when we lose, there's a number of ways we can shift blame. David, that's really interesting that we talk about, because one of the things that Mark always really believed in and could prove is that when you take a loss, the odds of you remembering that loss are 2.5 times greater than your memory of remembering the profit. Why that is the fact that people focus on the negative part of what they've done instead of the positive part of what they've done. So remember, get rid of that past stuff, folks. History's a mystery, so forget it. You don't need to worry about it. And just think of the present, because it's an unopened gift, and that's what you want to look at, because that's what you have to look forward to. You don't want to look backward. And that's what that fear will do to you, is it starts thinking, oh, what did I do wrong last time? Am I going to do the same thing wrong the next time? You can't do that. You've got to move on and do the same thing. And it's a mental game. It's that 9-inch cycle between your left ear and your right ear. If you can master that one, the rest of it, is relatively easy, because the chart stuff is so simple. I mean, just draw a few lines, connecting a few triangles. You're trying to find a spot where you think there's going to be support and resistance, and that's basically what you're looking at as you look at some of these things. So keep in mind that that's what you're watching as you look at some of those things. Now, remember last week we were talking about that December corn down at that 353 level. If you're able to buy that, keep your stop working at 348. If it gets there, it's in an abyss that you don't want to look down at because it could really go a whole lot lower. The same thing, if we get below 820 in those November beans, we're going to be looking at something really, really dramatic to the downside. Right now, we're trading around 839, and they've had a little bit of a rally this morning, but the bottom should be in based on that solar eclipse, that new moon that we had this past week, and we'll see, how it's going to end up. The crude oil market still looks bearish to us. We've been talking about that, for quite some time. If we take a look at this on a shorter term basis, which is a 4-hour chart, which allows you to see several months at a time, you'll be able to see, where we are here, that we're looking for around 65.5 to 66 in crude oil. We're trading just about 69, so we got another 4 or 5% lower in crude oil based on just this ABCD pattern that we're watching in the crude oil. And we're seeing the same thing, of course, in the heating oil and also in the gasoline. Both of those markets were much weaker because they couldn't get up, to test those new highs like we did in the crude oil market. So heating oil and gasoline both look a lot lower compared to what the heating oil is doing. Now, regarding the Treasury notes and Treasury bonds that we were talking about, I wanted to just take you across the pond for a minute over to take a look at the German Bund, because they were in the news a lot this week because of Angela Merkel. But you'll notice on Friday it went up and made an exact 78% retracement from the high back on May 28th. We've down quite a bit from that level. And this was a much bigger rally than what we had in the Treasury notes and Treasury bonds. And so that's why we had a negative bias coming in to bonds and notes for today, because of that negative bias that we have in the Bund and the fact that it does look like they wanted to go lower in the notes and bonds means higher interest rates. And that's so far what we're looking at. I see Deutsche Bank is rallying 7.5% today. That market still to me looks like Lehman Brothers, but we'll have to wait and see. By the way, I'm supposed to have a special guest on here in the next 3 or 4 weeks. Lawrence Ball has written a book about the Federal Reserve and what happened with Lehman Brothers. It's a very controversial book, but hopefully I'm going to have him as a guest. He's a professor at NYU, and he has agreed to do it, but the question is he's got to find time to, I don't know how anybody can not find 20 minutes. But anyway, we'll see if we can have him on and talk to him about how some of the games that were played, to get rid of Goldman Sachs's #1 competitor, which was Lehman Brothers, and they also got rid of Bear Stearns too in the process. But Bear Stearns, they brought that on themselves. They over-leveraged, and they just didn't do. They just basically got real greedy. You can't be greedy in this business, folks. We saw this with John Merriweather, with the long-term capital, and then many other people along the way. But the greedy become the needy. You got to keep that in mind. So we'll see what's going on here. But we have a pretty good rally so far in the stocks this morning. Back up on the day, which is good. But we'll see. We'll take a little break. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I wanted to bring up, I'm going to talk about the euro in just a minute, but I wanted to bring this chart up of the Deutsche Bank. David White asked a question about, does this move, we're getting a move of 20% off the bottom that we had down there at $10 a share. We're now at $12.05. That's just, to me, it's just a normal reaction. If you can see, we had these before, pretty much the same one. We had one back in March and April. We had another one back in February. We had another one back in January. In order for this thing to really think that it's going to make it, I would think you'd have to get it back above that 78% level at $13.50 a share. Right now, and this is just, I think, the emotionalism of the market, but the stock still does not look good to me. But, we did, have a pretty good bounce off of that bottom. It's a 20% bounce, but there should be a lot of resistance at 13. That's another 8 or 9% higher than where it is right now. So that's the key to look at. Let's take a look at this euro here for just a second here, because this is where the money is. They can talk all they want, but this is where the money is moving. You can see we came down to a 61% retracement here last Thursday. That was Friday, Truskai Decaphobia. Fear of the number 13 down at 116.30. We've now rallied 100 pips. We went right up to the exact 61% retracement of the high that was made on July the 9th and the 78% retracement of the high that we made on July the 11th. If we can get above 117.50, that is going to be a potential game changer, because the overall, picture in the dollar index is relatively it's a pretty strong chart. But the key is, if you look at this dollar index for just a moment, and this is very important from a technical perspective, you'll notice that we made a double top from October of last year to July of this year. And as you can see, we've been here for 3 months, folks. Now, to me, this is a very, very bullish chart. And the reason is we've been up here for 3 months and we haven't gone down. We could have gone down last week, but we found major support at 93.50. We're trading at 94 and change. If this can get above 95.40, which would mean the euro would have to weaken dramatically and get below 116, way below 116, probably closer to 115, then you'd have a breakout in this dollar index and you could start to see it move a lot higher, i.e. the euro moving a lot lower. So that's what we're looking at. Now, I know there's a lot of news out there that's going on about what's happening with the tariffs and the European Union and all the other stuff, but I try not to listen to that. Just look at the charts and they'll try to tell you, you know, what the money is doing as far as flowing. Just like we're looking at in the, you know, the British pound. We're having this really nice 200 pip rally after a 300 pip drop. So what are you doing? You're rallying back about 78% of that last move, and that's really what you're looking at. So let's kind of keep an eye on that. But if we, the dollar index is trading right around 94.27, David, if we can get that at 95.27, that's got game, because then you're going to be looking at the euro, you know, heading down towards the southern hemisphere. In other words, going a lot lower, most probably down to 108. I still believe that the longer term price objective in the euro is right around par, 100. And if you'll look at the long-term picture of the euro going back to 98 when it first started, you know, it's been below par several times. We've got down into the 80s, 85 several times in the euro. So it certainly can do that. Now there's 29 countries in that European Union, and I've always felt you can't get 29 people to agree on anything. And Germany has been the one that has been, you know, leading everything. And now with Brexit, if another large country like France or Italy or, you know, Spain, somebody like that would drop out, then you're going to start hearing some thundering hooves and people leaving the EU, and then the euro would be in big trouble. But we'll see. It's a giant experiment so far for 20 years. It's been doing well, but, you know, we have to wait and see if that is going to be the case. I've been asked to take a look at the wheat market on just 1 second here. I've got to get the futures up here just to let you see the wheat, because we've had some really good support that we talked about here last week here in the wheat. We've had a really good rally that's continuing so far, so we'll see if that's going to be doing it. I really believe that corn and beans have come down to levels technically that look really interesting. Now remember, we're in the midst of tariffs, so you've got to protect yourself in here, because if they don't hold these levels that we made last week, boy, they've got a potential to really head really head a lot lower. So those are just some of the things that we're keeping an eye on in these commodity markets, because most of these commodities have really gotten hit hard. Folks, we have a situation now in sugar where it is sugar has broken again. Let me just show you again, because we're down again in sugar today, making another lower bottom here. We're trading below 1070 in sugar. And just about a year ago, sugar was 25 cents a pound and looking like it wanted to go to 50. And here it is, you know, at giving back 80% of its value, and people are still bullish about it. I mean, you know, there's nothing bullish about that chart at all. So we'll see, you know, how this keeps going. A question about the crude oil. How strongly do I feel about that price level of $65 per barrel? That's not very far away, folks. That's just 2 days of action like we're seeing right now, and you could be there very, very easily. Remember, we've come down from $73 to 69. That's $4 a barrel. That's what, a 7% drop, and just a 6% drop in 2 weeks. So another 3 or 4% is really not much at all. And so they should have some good support there at 66, you know, in the crude oil. Now, whether this is related to anything that's going on with these talks with Russia, I do not believe that. I think all this stuff is not related to that. And just follow the money. You know, when you're doing these foreign currencies, follow the money, because that's what's going to tell you what it wants to do. And that's what's happening. Look what's happened to the stock market, folks. Son of a gun, we got all this negative stuff, and what's happened? The doggone things go straight up. So we'll see if that's the case. Now, we had a huge swing here in the NASDAQ in the last 10 minutes. We went from 74.06, and we dropped 26 points really quick and then came back. So remember, when you're trading that NASDAQ, you're trading basically the pork bellies of the financial futures, because that thing really jumps around. It's not for the faint of heart. So pay attention to that one, because it's really crazy. Someone's asked a question, am I still bullish gold? Yes, I do believe gold is going to hold 1230, and we'll see if it does or not. We're trading around 1241.5 right now, and we'll wonder what's going to happen. We have a 20-cent rally in beans right now from the low, which is something we were sort of expecting, and the corn is acting pretty good too, but we'll wait and see how this is going to work out. But all I can tell you about these tariffs and stuff, folks, is I don't understand what's going on, but neither does anybody else. It doesn't make any difference what financial challenge you look at. They'll have one person coming on, and then 2 minutes later, they got somebody else coming on, contradicting the professional that was just on before him. There's not been a consensus, but everybody says it's bad except the market. And the market says, I don't think it's bad. So somebody's right, whether it's the pundits or the market. And the market seems to be the one that is controlling it as we speak. Right now we're down. We've sold off quite a bit, of course, in the Dow Jones. We were up about 100 at one time, and now we're down a little bit. The same thing in the Nasdaq and in the S&P. The S&P was interesting, folks, because if you'll remember, I'll bring this up at the break here, because look at this chart that we had from our good friend Stan Harley. I'll post this up, and you'll see where we were here.
A Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I just wanted to put up this chart of the E-mini S&P to show you it really has a lot of repetition here. If you notice it has the high probability of making 11-day rallies. And the 11th day rally, of course, came in today. Whether this is going to be a top or not, I don't know. But you can see there's been 4 really good examples here over the last few months to see what's going to, if that's going to happen. Now, that was a butterfly bottom in the beans, but you know these things can fail, folks. So you've got to put stop ins. I know it's rallied 20 cents off the bottom, but that doesn't mean a whole lot. So sort of pay attention to that, because if they don't hold, they've got no bottom down here. I mean, it's literally an abyss if we go below 825, 820 in the November beans, and if we get below 348 in the Christmas corn, that means there's just no business. I mean, they're not going to stop eating, and I think this is all going to work out. I really do. The market, the stock market, is telling you that the doggone thing, there's something's not right. There's something not going on. Maybe they'll finish this tariff stuff and the stock market will all go down. But right now, it doesn't look negative. I mean, it really doesn't. I mean, shut the front door. We should have a correction, but for heaven's sakes, look what's happened over these past few months. With since June 1st, we start firing tariffs off. Here we are in the middle of July, and the market is higher. So, somebody's moving that money, and that's not scared money, folks. That's money that thinks they know what it's doing, and it certainly has been what's happening. So we'll see. Anyway, if you did buy the corn and the beans, keep your stops working and, pray for the best. That's all you can really do. But people are not going to stop eating, that's for sure. The soybeans has an inelastic demand. It doesn't make any difference how high it gets or how low it gets. People are going to use it. You just have to remember that. That comes from Paul Samuelson. And that's, no, it's John Galbraith that said that. Excuse me. John Galbraith said that soybeans have an inelastic demand. Okay, folks, we'll see you tomorrow on the Flip Flop. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!